We all love talking about politics. We all hate talking about politics. But today I'm going to break down the two initial, kind of affordable housing ideas that are presented by the two presidential candidates. Like I said, we'll keep it clean, keep it great in the comments. Let's not offend anyone. Let's not go straight out of straight to you're ignorant, because that's one of the worst things you could do. So we're going to be kind to each other and we're going to dive in. I'm going to give you all the information next. So, if you don't know, my name is Jeremy Kane with eXp Realty. I have a YouTube channel, Living in the Denver Suburbs. We're going to bring this presidential election and their ideas on housing full circle into how it affects you in the Denver market, and that's where we're going to go. So, while you're here, like, comment, subscribe, be kind to each other. I pride myself on putting out information that will be helpful to you, and maybe pull back some of the confusing curtains that are out there this day and age. I want to dive into the two kind of sides and what's really going on and how it comes out. So first and foremost, we'll talk about Kamala's policy that she just spoke about last week. On the surface, $25,000 to first-time homebuyers has really good, feel-good ideas in it. And then in the same sentence, she talked about, incentivizing builders through tax cuts and so on, which I will remind you that builders are some of the highest net worth companies out there. So all this, tax the bigger corporations and so on. Not sure where this fits in, but the point is that we are short on housing. Now, on one hand, we're talking about, inciting some demand with a $25,000 down payment assistance, offer to first-time homebuyers, which we'll talk about that in a second. And then we're talking about inciting a, increase in building, which is the supply, right? So the whole point is that we are short on supply, and that is the main reason that demand, even in the higher interest rates, is really kept up and at least stayed steady. So let's start with the down payment assistance piece. I will tell you that $25,000 in a down payment is not the main problem we have with people getting into homes. And I will also tell you that that $25,000 could be spent in a lot of different ways. That would be more beneficial to the buyer. So the fact that this is a down payment assistance grant, or whatever you want to call it, is a little bit short-sighted at surface level, right? Because $25,000 to go towards closing costs, especially with the higher interest rates, could have a massive deal, right? I think I did the math and it was like $200 less if I had $25,000 more to put down versus, like $700 less if I bought a point, with the $25,000 a permanent buy down on the interest rate. So that alone is a massive difference and could absolutely help the affordability piece of homes with the mortgage payment being affected greater by using that money to buy down an interest rate permanently to a more comfortable place. Okay. The down payment doesn't do as much, especially in our average price point here in Denver, $700,000. It's approximately a 3% down payment when you really get into it. So that's the first piece. The second piece, let's go over to the incentivizing the builders. I will tell you that builders would pay anything they possibly could to get the trades into there and build. So I don't know if we need to further incentivize at that level, or if it makes more sense to reallocate that back into maybe trade schools and kind of prime the pump so that there are more educated and skilled workers that are able to help build those homes. So I'm no politician, and the truth is that we don't really know where this is going to get paid. As that question has been asked, it's just higher taxes, for the corporate and, the upper class and all the things, which is just fine, right? And so I'm just laying out there kind of the yin and the yang of all of that. Now, I will tell you that Donald Trump has a totally different housing approach, and it's not very detailed, right? So he talks about deregulation and, pulling some of the things out and all of that. To Trump's point, I will tell you that the states all have very good down payment assistance programs as it is, right? Colorado here has a program, Colorado Housing Finance Authority, CHFA it's called, and essentially that is pretty much the major player in down payment assistance in Colorado. It's never run out. It's a very well-run, established, offering. They also help with some rent and affordable renting and stuff like that. But the way the CHFA down payment assistance program works is it's funded by investors through bonds. So the investors get paid on the higher interest rate that this down payment assistance is funded through. So the investors put money into it. The money goes out to the borrowers for down payment assistance. They do have to pay it back. Typically, there is a grant program that they don't have to pay back after so many years, and there is a silent second program that they do have to pay back when that loan is, complete or refinanced or the home is sold or whatever. So there is those two options as far as the grant and the repaid, but it's a silent second, so you don't pay any interest on it, and you don't pay any of it in the monthly payment. It just comes back when you get out of that loan, when you completely pay off the loan or you refinance or you sell the home. So that locally works really well. I do know that other states, every other state has some sort of down payment assistance program that works pretty well. I do also know that some states have, had where there's a lump sum and they run out of money and so on. That's a whole different ballgame. But the truth is that there is a sustainable piece that isn't fully government funded, and it's not coming straight from taxpayers to the consumer, and there is a payback and all of those things. So, ultimately giving it back to the states is, kind of the idea of what Trump has said. I will go to Trump's other piece of his housing plan, which is the opportunity zones. And I will tell you that opportunity zones, in theory, should work, right? An opportunity zone is something that an investor who already has capital, a capital investment or a capital gain, if they sell a property, an income property or a real estate asset, they can purchase a like-kind property that is more expensive and avoid that capital gain or kick the can down the road, as you will. Opportunity zones came into play where it wasn't just like, okay, we're going to sell this duplex and buy an apartment. Opportunity zones are state mandated areas that have low income that investors can put their money from an investment property into an opportunity zone fund, and that opportunity zone then regenerates and builds, and it's an income property and so on. I will tell you some of the workarounds that have come from this is the states are going based off of general income. Well, a lot of the college towns, because the students don't necessarily have the highest income, and there's a lot of people, there's a high population. So those have been opportunity zones, and that is a lot of the, rebuilding and regeneration of some of, there's a lot of student housing. It's kind of high priced. We're not really doing a ton there that the opportunity zone kind of was set out to do. So it's a great tool for investors. It's a great, tax shelter, so to speak, if you already have an asset. And so those are kind of the two, kind of platforms that these two are running on. And at the end of the day, affordable housing, in my opinion, no matter what president talks about it, the affordable housing system, especially in Colorado, is broken, right? The affordable housing, if we need more affordable housing, great, yes. If it's a cheaper option for people to get into home ownership, yes. But the problem is that our affordable housing system is very hard to qualify on the front end. So they build these condos, and these people are building them, and then the government essentially controls how much they appreciate, who can qualify for that. And a lot of times the income is so pinched that they don't even qualify for the loan when the income limits are that low, or they can't afford it. Now, with that said, when it does work out, when you have, within that income limit and you get into it, I've talked about this on this channel a lot. When you get into it, then the appreciation is suppressed forever. So essentially, you're just doing a principal buy down. Your loan still has interest. Your loan still has all of that. And so you're buying it down based on your 30-year note or whatever, but you're not really getting anything but the principal buy down. So essentially, it's just a savings account because the appreciation is so diminished. Even if around them, the free market has appreciated 10%, you're only going to appreciate 1%. And I don't know the exact numbers, but essentially when I did the math, it was like, well, you could just put, the little amount that goes into your principal buy down, at the beginning of a 30-year note into a savings account and be just as well off because the appreciation is very squashed. And so when we talk affordable housing, I get frustrated because if we are talking affordable housing, the point is to get somebody into a home and give them an opportunity to move forward, right? And essentially, we're just having them rent with an interest rate and not being able to benefit from the appreciation. So there has to be some changes there, no matter who gets elected, as far as how we manage that. Okay, let's have affordable housing and let's, have these down payment assistance funded by the states, and let's make this an entry level, right? Once that house is built and it's sold to the first time home buyer, maybe there's some sort of agreement that, you have to live in it for X amount of years or whatever that is. But if we limit the amount that appreciates, then we are limiting one of the biggest pieces of the wealth building portion of real estate. And so that's that. Now, while I was doing this research, I put a lot out there. Most people kept it clean in the comments on my Facebook page. You can go look at that. It was Saturday this week. But a lot of people said, okay, we like what our state offers. A lot of people said government has to get out. They have no right in all of this. A lot of people said that it sounds good. I would like $25,000 for free. And so there's a whole mixture, and we are so divided, right? One of the things while I was researching I came across was an article that I will post in the comments if you want to read it. And it just said, Kamala has it right. This is moving towards a Singapore type market. Well, I looked at Singapore and I read the article further. It says, but in Singapore, the government owns all the land. They provide $61,000 for down payment assistance. But because they own the land, the asset does not appreciate as much. So again, there's a lot more control. And I don't know about you, but I would almost bet that no one is willing for the United States to to maintain the land and real estate involved in our market today. So there's a lot of things. I also looked up Singapore's tax system. The highest tax bracket is raised 24%. The lowest is at 19 or something. If you make below 20,000, you don't pay taxes. So there's a lot of things different there, and there's a lot of government oversight because they own the land. So comparing what she's doing by giving 25,000 to Singapore and that being a good system is a little bit broken. What that article did say was that we are at odds here, right? Because if we make housing more affordable for first-time home buyers, we are affecting the biggest piece of wealth of all Americans, which is the value of their home, right? So nobody wins. If we make housing more affordable, as homeowners, we lose equity, right? But if we make it so that people can't get into it, then that gap widens as well. So we do have a dichotomy there that is very difficult. And that's why both of the presidential candidates obviously have a huge problem on their hands, but they also have the ability to allow the states and state by state to kind of work through that, provide their down payment assistance. Maybe some of the government funding goes to help solidify some of those down payment assistance programs so that that is not a stepping stone for getting into it. So, I hope this helps. I hope you understand that both of these candidates are a long way from solving our housing affordability problem. And so just don't buy into, lip service, right? We're going to deregulate everything. Everything's going to be fine. That rich people are going to help the poor people, and we're all going to live here in great harmony in a wonderful housing market. And also don't buy into, we're going to give all the first-time home buyers a piece of the pie, and they're all going to get in because we're providing this X amount of down payment assistance, and that's going to change the world. Because the truth is, neither of those things are really possible, and neither of those things are really the solution to the problem. And so I think what needs to happen is we need to look at the affordable housing piece that we already have and make that better, right? Make that truly an opportunity for somebody to get into a home and launch their real estate, wealth building journey, whether that's single family home, buying your own home, or, investing as a mom and pop and having a few rentals. And you can make a few guidelines around that. As far as you can't rent it out for 10 years or, all those things that could come into play, absolutely. But if we're talking about changing the financial trajectory and the wealth of people as Americans, then we need to understand what really helps build that wealth and not take that away or regulate that. So I hope this helps. I hope you guys liked my breakdown of it. I'm sure that I said a couple things maybe that were a little bit edgy and maybe that you think are wrong. I appreciate you telling me in the comments. As always, please like, comment, subscribe, and we will see you on the next one. Bye-bye.